Hello everyone. Now in this video, I'm going to talk to you about a risk structure I've created, which I'm going to use to scale prop firms. We're going to talk about the pros and the cons of the risk structure, where in fact you only need to be correct 1 in 8 trades to make money. And then we're going to do some backtesting, not a lot, but just to show you that this actually works. The idea with this risk structure is that you can actually be quite a poor trader with a low win rate and still make money. But there's cons with this and there's risks that you need to accept if you're willing to do this. And at the end of the video, I'm going to talk about what my plan is, because my plan isn't solely to use prop firms. I don't want that to be the plan. It's something which I'm going to experiment with. Okay, so before we crack on and look at this risk structure, if you want to follow my Telegram, it's the first link in the description. And in there, I share all the trades I'm taking, all my analysis, all my ideas, all these updates and everything that's going on in the Forex world. Anything I find interesting, I just chuck it in there completely for free. So if you're interested and you're along your journey and you think that could help you, get involved. So here, I just want you to look at this table and we're just going to go through each column very briefly and so you understand how this works. So obviously in this column, you've got trade number now. Obviously this is trade number 1, 2, 3, etc., etc. Here's the risk. So on the first trade you take, you'll be risking, or I'll be risking 1% per trade. On trade number 2, I'll be risking 1.3, trade number 3, 2.25, and etc., etc. And here 95% is the total amount of risk I will be using across the 8 trades. We're going to be using a 1.25 risk to reward. And here in this column, if win, this is the profit. So if we win on trade 1, we'll make 1.25%. If we win on trade 2, we'll only make this much because we're including the loss from the previous trade and etc., etc. So you can see trade 1 is the most profitable, and then after then it slowly becomes less and less, and around a 0.5% gain or around a break even. So the idea of this risk structure is that you're not martingaling, so you're not always making the same profit every time and doubling up, because trading like that can be quite risky. You can blow account very quickly. But the idea is that your win streaks are going to be quite high because we're going to keep winning. The lose streaks are going to be still profitable. They're just going to be around break even. That's the idea behind this. Okay, it's going to be it's less it's more risk adverse than martingale, but it's still higher risk than just risking 1% per trade every single trade. You can see in this column total drawdown. This will be the drawdown if we lose 2 trades in a row, 3 trades in a row, etc., etc. So you can just pause you can pause the screen and have a look at this. If not, there's timestamps below, so you can jump around to whichever part of the video you think you need to watch next. Here we've just done an example. If we have 5k account, then this is the money risk. Okay, this is in money value. So £50, 65. This is the risk per trade. This will be the drawdown in pounds, and then this will be the winnings. Okay, so we're just going to briefly go through the pros and cons, and then we're going to back test some trades. So I'm going to show you that this really does work. So one of the pros are that you only need to literally be correct 1 in 8 trades to make some money. Okay, now if you go through your journal and you look at all your trades and see how possible is that, how likely is it that you're correct 1 in 8 trades? Because if you're not correct 1 in 8 trades, it probably doesn't matter what sort of risk structure you use, you're probably just not profitable yet. Okay, so this is more for profitable traders. I've never actually had an 8 trade losing streak ever, even at the start where I was not profitable at all, making a lot of decisions, entering and exiting too early. But I've never ever done that. And as soon as I started applying a set and forget approach and letting the statistics play out more, I've never had more ready than a 4 trade lose streak. That's been the worst loss streak I've ever had. Another pro to this is that it's less stress than hedging. You might be familiar with hedging or scaling in, where if a position goes against you, you double down. Okay, with that, it's a very hands-on approach. You need to be watching. You need to be seeing where price bounces on the same chart all the time. With this, you literally find your setup, which we're going to go through now about the setups that I like to look for. But you can trade however you like, and you find your setup and you set it up, and it's gone. And before you even enter, you've already pre-calculated in your head the risk you're going to give that trade, okay? Because it's all out there on the table that we just went through. So I'm not saying that you should go ahead and use this. I've only forward tested it a little bit. I've back tested it a lot. And you probably ought to check your own journal and see if this works. This works. This is all these numbers were quite specific for a 1.25 risk to reward, okay? If you use a different risk to reward, you might want to change the numbers around. The trick is that you don't want to have a super high risk to reward where you start getting a low win rate. A low win rate can lead to lack of confidence. And with a risk structure like this, you need wins, 1 in 8 trades. The way I like to look at this is it's more of a get rich slow approach rather than a get rich quick. Okay. But however, there are some cons. So the cons are that towards the last few trades of the 8 trades that we give ourselves, it can become very high risk. Okay. You might want to tweak it and become, less risky. And perhaps after 4 trades, you just reset back to the first one, whatever. But the way I've set it up, yes, the last few trades can become very risky and it increases quite a lot. The other risk is that it's possible to blow an account in just 8 trades. Okay, again, you ought to go through your journal and see if this is actually likely or possible with you. I know that the way I trade, I don't think that this will ever happen. And if it does, I would think no more than once in a year or 18 months maximum. And another con is that you do need high leverage. If you get down to like a 5 or 6 trade losing streak, you will need high leverage to enter those last few trades because you're risking a lot of the account by that point. Okay, so now it's time to backtest some trades. Okay, so before we go ahead and backtest, you can see that here, like a lot of the backtesting I've already done, you can see all these winners. Okay, how often do I have an 8 trade losing streak? Here, there was a 3 trade loss streak. That's not great. Okay, the numbers here just literally represent gain and loss. So obviously the exact numbers we would change and specify. You can see there's more trades here. These are trades in the past, but again, like an 8 trade losing streak, even when I've had bad periods, there's never ever been an 8 trade losing streak. Okay, so now it's time to jump in and do some backtesting. Okay, so I've got 37 pairs here on my watch list. So we're just going to go to the random number generator, 1 to 37, and that's going to give us the pair that we're going to test. Okay, 18. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. All right, ADJPY. Cool. So we're going to get a fresh chart up and we're going to go from there. Here we go. So we're going to minimize it down. We're going to go to the 4 hour, minimize it right down, and we're going to go back around, a year. So something like that, just somewhere completely random where I have no idea what's going on. Okay, so here we are in July of 2022. Now, the way that I like to trade now is I like to draw clear zones where prices spiked, and we're looking for maybe the second or third test max. So here, this would be a good one where prices clearly spiked off in the past. We're mainly using H1 zones, and that's it. We're going to wait till price gets there. If it rejects, we enter a sell with 1.25 risk to reward, hoping that we're right 1 in 8 times. Okay, so price has got up here, it's rejected. We're going to go for it. So we're going to enter a short here, 1.25 risk to reward. Stop, quite a tight stop just above the zone. We're not looking for a trend change or anything. We're literally just looking for a mini bounce. Okay, so this one was a loss. Okay, so what we're going to do is we're just going to mark our trades here. So we're just going to go -1. That's the first one, -1R. So here's another good one. Price has come up to the zone. It's spiked. It's rejected. We're not looking for anything too, like, don't overthink it. Don't be too deep. Here you go. Stop above the zone. 1.25 risk to reward. Okay, cool. That one's a winner. Okay, so here I've just made this mini table. So you can see the first trade was a risk of 1%, and that means we lost, so -1. The second trade was a risk of 1.3, but we won, and it was times 1.25, risk to reward that we used. So that's the gain, okay, of trade number 2. Now we're going to go and find trade number 3. Okay, so this was a good one, but there was no rejection, so we just leave it. Okay, that's how we avoid the ones where price completely, spikes through a good zone. Okay, this is another one where prices come back, break and retest, it's rejected. We're just going to enter short here, 1.25 risk towards. Don't overthink it too much. There we go. Okay, that one, unfortunately, was literally just a loser. If we went a bit wide the targets, that probably would have been a winner. But anyway, that one was a loser. And this one was a risk of 1 because after a winner, you just reset back to trade number 1 again. And this was -1. If any part of this video is ever confusing or anything like that, please do just let me know in the comments, okay? Because I understand this isn't a simple double after you lose type strategy. There's a bit more nuance to it. The way that I came up with these numbers was actually just by looking at it and playing around. There's no real mathematical thing to it. It was just more of like, I spent quite a lot of time playing around, seeing what I thought worked best. Okay, now let's look for trade number 3. So if price can reject here, we're going to enter. Okay, cool. Here we go. So it's rejected. It's actually, in this specific case, we're going to leave it because although it's rejected, it's not quite in the middle of the zone, and it did wick off a bit. So you could argue it's almost rejected the other way also. So yeah, that was a good one. We left that because that would have hit stop loss. Okay, so price has come in, rejected this zone. Again, this zone's had big spikes in the past, and we're just going to enter here a buy. Okay, this has been another loss. So in this case, this would have been 1.3. Sorry, 1.3. And so therefore we would have lost -1.3. Okay, this is another one where we're just going to enter rejected here. In real time, we would definitely have entered at this one, but I've skipped it a bit too fast. So we're going to enter here and hope that it still plays out. Okay. Okay, this one was another loser. So this is actually quite a good example of how we're going to get quite a few losers, but I like to think we're still going to make profit. Okay, so this is trade number 3, so 2.25. And this is going to be -2.25. Okay, so now we're going to look for trade number 4 in a losing streak. And again, this risk will be slightly higher again. Okay, so prices come to the zone. If we get some rejection, yeah, we're going to enter a sell. Okay, that's not good enough rejection. One more candle. Again, I don't really like this price action, so we're going to keep watching. Okay, a lot of hammers here. So it's good we didn't enter that. There's never really some strong rejection and price is broken through. Again, we're going to keep looking for the most extreme zones. Now, the actual way that I trade and everything, we might make this into a separate video or a bit of a course at some point for those that are in the Sam's Effect Society. So don't worry too much about that. The reasons for entering and exiting a trade, that can be all completely down to you. Okay, unfortunately we went too quick, but this would have been a very good example. Came to extreme zone, rejected, and we would have entered here and got a 1.25 risk reward winner. But we're not going to take it because I skipped too quick, but just to show you a good example of how it would work. When price comes to the zone a second time so quickly, typically I disregard it. Okay, I wouldn't be looking at it as well. Okay, we got a bit of a break and retest here on the H1, so we're going to take it. Okay, we're going to go for a buy, stop below the zone, 1.25 risk reward. Okay, another loss. So this one, again, minus 4.05% loss. So we're going to just go straight into the next trade, okay, changing nothing about what we're doing. Just stay focused, losing streaks happen. We're going to see how we go. Again, this is another one which we sort of missed, but this would have been a good one. Price came in, tapped, reject, and I need to go a bit slower because we're missing a few winners here, which is a bit of a shame. Okay, this would have been one. So we're going to go in here, 1.25 risk reward, stop just below the zone, see if it plays out. So this one was in fact a winner. So this time, this is trade after 4. This is trade number 5. Okay, so this is a 7.3% risk, and that equals a 9% gain. So again, you can see here we have such a low win rate. Okay, in this specific example that we're showing, yet still profitable because if we go for some here, we go take all these trades and we add them together, still come out with a 1% gain, which isn't bad if you lost 1, 2, 3, 4, 5, and you only won 2 trades. Okay, and this is how I'm going to trade. Going forward, I'm going to share everything in my Telegram, and this is my goal to scale using prop firms. We could go on and show more and more examples, but I think you get the idea. Okay, this maybe been a bit of a longer video than normal. Okay, going into quite a lot of detail, but this is how I'm planning to trade going forwards. I'm planning to have my own smaller personal account, and I'll be showing all my updates there. And then I'm also on the side planning to run a prop firm account. I'm in the process of choosing which prop firm. The number one goal of the prop firm is that it's reliable, so I'm probably more leaning towards FTMO. But then after that, I want it needs to have decent amount of leverage, and it needs to have not a really low daily limit. Okay, so that's what I'm looking for. So if you have any specific ideas and you want to help me, feel free to email me. My email will be in the description or on my YouTube somewhere. So yeah, I hope you found that video useful. Thanks a lot. See you next time.